He called the 2020 recovery in stocks. He said that the S&P 500 index would be exactly where it was and recover in April of 2020. And then he called it to go and hit a peak and recover pretty much exactly where it was in August of 2020. Who am I talking about? I'm talking about Tom Lee. I'm thinking that Tom Lee might be a legend here. I got Tom Lee basically talking yesterday. At the time of this recording, it is Friday, February 26th. And we had a very, very extreme red day in the markets yesterday, Thursday, February 25th. And we've got Tom Lee talking about the correction and what's going on with it. So let's go ahead and take a look at what he has to say. I definitely enjoy Tom's bullish opinion, and he's spotting the corrections. Having said that, I did see Tom Lee say he was forecasting a correction in at some point between maybe late January, here we are at the end of February, in between February and April of 2021, and then a good year for equities after April 2021. So let's go check it out.
Tom Lee, Head of Research at Fundstrat Global Advisors. Tom, good to see you as always. I have a feeling you're going to be a little more constructive perhaps than Dan. But my first question is, yields rising, VIX spiking, GameStop, of course, surging as well, with therefore talk of potential degrossing elsewhere. Which factors most at play for the sell-off today, and which worries you the most?
I think it is a sort of a cumulative set of effects that broke this, the camel's back today. I think really kind of going into this week, a lot of investors were overweight tech and growth stocks, and as you know, they've been really tired and underperforming this year. I mean, they're flat in an S&P up 4%. And then with the rise in rates, I think people got even more nervous about growth. And I think the GameStop today, and it certainly looks really highly correlated to the VIX as we sent to our clients, I think is giving people sort of, echoes and nightmares of mid-January. So I think it all contributed to a pretty big risk-off day. Does this sort of change the trajectory for markets? I don't think so. I mean, I think the underlying economic data continues to be really good. The advice to our clients continues to be add to your epicenter exposure to the cyclicals. Energy's up 30% year to date, and cyclicals collectively are up 11%. So the market has really revealed its hand this year to be really tilted towards the reopening trades.
What would make you change that view, Tom? Are technical levels important to you? If we see a further sort of breakdown of the broader uptrend, would it concern you, or are you still focused on the fact that reopening is coming and policy generally remains pretty loose?
There is, the epicenter stocks are only 30% of the market. So 2/3 of the market is growth, and you don't want to panic out of growth stocks. And so I think part of that is, there is a level of interest rates. I don't know the level that gets everybody nervous. But of course, we're forgetting the Fed's still got a lot of policy tools left. So it's not as if interest rates can rise without concern. But the other piece is, of course, if there's risk to the reopening, and that's why we have to watch COVID really carefully and the variants. The vaccine's pretty effective, but yes, it's been uncertain for the last year, and it's really difficult to make forecasts.
So there you go, right there from Tom. I actually found Tom Lee, I think it was in 2018, at some point in 2018, talking about his bullishness with respect to what he thought about 2019, and then listened to him quite a bit, actually, in 2019, certainly, quite a bit, and have been enjoying his take. As stocks started to get better in April and May of 2020, I was certainly enjoying his takes on everything as well. Definitely some good insight there. He's from Fundstrat. Obviously spend a lot of time, they do spend a lot of time on research. Tom's talked a lot about cyclicals. He's been certainly, I've heard him talk rather bullishly on energy. And just in case you don't know, cyclicals, what they're considered to be, because the word's used a lot, and, everybody kind of assumes they know exactly what that means. But just to give you, maybe a better illustration of it, they represent companies that make or sell discretionary items and services that are in demand when the economy is doing well. These include restaurants, hotel chains, airlines, furniture, high-end clothing retailers, and automobile manufacturers. So that is a little bit of a definition for you on cyclicals. So hopefully you enjoyed that. Here we are Friday. Markets are doing a lot better. We had a couple companies report, one of them specifically Etsy. I'll put a link to the Etsy video I'm doing an Etsy video as well about their earnings release. They absolutely blew away numbers. So the market is up. Shouldn't say, well, yeah, in general, a lot of the growth stocks are up pretty big today, but that's because a lot of them were actually down pretty big yesterday as well. So anyway, have a great week. If you have any questions, let me know. And I'll put a link in the description area as well. I just came out with a blueprint. I cover investing, online income. I cover credit, business credit, and financial independence. I've got a guide at the end, which is actually, I think, a 15-page guide. All the groups in the U.S. that offer a free credit score, and then all the groups that offer a free FICO and the corresponding bureau with that FICO, so you never have to go and pay for a FICO score again. That guide is it's a blueprint. It's only $7, everybody. Thanks a lot. Have a good weekend.